welcome to another episode of Shooting
the Shit with Rachel Ann
and Neil Youngs. We're talking all things real estate photography business growth, mindset, and getting it done. Here come your favorite true entrepreneurs, Rachel Ann and Neil Young, shooting the shit.
I have a ferret on the Like if we're kind of in a slump, like what kind of things do you do?
Talking about a boob light.
Straddling a power line.
Nice photo.
Ooh, I need that.
I'm like red right now because I'm embarrassed. I go like this. I love it.
Hey, come in.
Sure, use your podcast voice.
Over here, I'm pitting out.
Drone's like flipping to the ground.
That's a great callback.
Chit-chatting.
Is that what you call that?
Hey!
Hey!
Rach, who do you love?
HDPhotoHub.
Today's episode is brought to you by HDPhotoHub.
The platform real estate photographers trust.
And so do we, because Rach and I both use it on a daily basis. Check it out. For our summer series for Rachel's Power Team, today we are talking to Brandyn Cox, who is an accountant. And so we're about to get all the dirt on what we should and shouldn't be doing for all things accounting, including like taxes, write-offs, what's going to get us in federal prison, that kind of stuff.
Hey guys, what's up? I am excited to have Brandyn here today. He is a wealth of knowledge, and every time I hop on a call with him, I'm just blown away with how much he knows. So I'm really excited here. He's here to share it all with us. So Brandyn, why don't you say hi, introduce yourself. If you could just tell us a little bit about how you got started in accounting and what your journey has been and where you're at today with your business.
Yeah. So like you guys mentioned, my name is Brandyn Cox. I own BMC Tax LLC. I started this company back in 2017, actually, when I was still in college. I just got out of the military a couple of years before that, and I was going to school for criminal justice, actually. And then I took an accounting class, and I really liked how accounting overall, it's a lot like a puzzle, especially if you're not familiar with it. You get to know where all the pieces go and have everything right, so people that are reading things like financial statements know what they even mean and can read them. So I started doing that in 2017. I was like, I got a neighbor across the street that owns a lawn care company. Maybe he'll be a client of mine. And that actually was my first client. It was just one of those things that he'd cut my lawn for free, and I would do, some books and stuff for him. And I ended up really enjoying what I was doing. So I decided I was going to take this a little bit further and actually really go full force on my own firm. And that's exactly what I did back in, the end of 2017, beginning of January 2018. So I've been doing this now for a little over 5 years. I've got 4 employees that work for me. 3 of them are military spouses, and all 4 of my employees work remotely as well, just like I do. I work with clients all over the world. I got every single state. I got about 5 or 6 different countries that people I work with in as well too. Now I only do file American taxes. I don't file taxes in other countries, but they are Americans that live in the other countries as well. So what I am is I'm what's called an enrolled agent. It's kind of funny because I always joke with people that most people have no idea what an enrolled agent is. And usually you don't find out until you've really screwed up and you really need some help with the IRS, because enrolled agents are the legit tax professionals. We are the ones that are tested before the IRS. We have to go in front of the IRS, take examinations, and actually show our competence in tax laws to be able to represent clients, prepare tax returns, and do anything whatsoever with clients and taxes. So we are the highest credential that the IRS has. And I've really enjoyed doing this for the last 5 or 6 years. It's been a really great career.
That's cool. Talking to the real deal right here then. Yes. I love it.
Yeah.
Cool. If you can't see the video, a lot of people are listening as well, but it's very clear that you were Army.
Yes, it was back in 2007 to 13, coming up on 10 years being out now. I'm starting to feel real old.
I know, right? As soon as you start doing decades, 10 years.
Yeah, right. Back in the 2000s.
Yeah, it goes by so fast. That's awesome. Cool. I didn't know you were all over the world. I just thought
I am. Yeah, I've got clients in Korea, Japan, Italy, Germany, some around in the UK area, and then I've got some in Africa as well too.
Wow.
Is that all that military connection? Is that why?
Some of them are, but not all of them. Some of them,
Oh,
I'd say 3/4 of those are military connection. The other quarter are just those that have been handouts and they live overseas, but they have all their business dealings in the U.S.
oh, okay.
Hmm.
Interesting. That's cool.
That's
And
awesome.
then and then you also handle in the US. So this is one of the things when we were like brainstorming before, like what should we ask and all that stuff. One of the things was like I was wondering, well, does he know, all the laws, how they vary from state to state and all that stuff. So you can handle kind of figure it out for
Yeah,
anywhere.
absolutely. There are a couple states that don't have state income tax returns, so you don't have to really worry about those during every year unless you're doing annual reports for like a limited liability company or corporation. But otherwise,
Mm,
yeah, I work with every single state, and there are some nuances that are different from one state to the next.
yep. Yep. Cool. Cool.
No. And so you help out, you have a few of your clients are real estate photographers. Is that correct?
Mhm. Yeah, I'd say I probably pump out about 800 to 900 tax years return or tax returns a year, and I probably have between 20 and 40 photographers every year, and a good chunk of those are real estate photographers.
Mm.
That's awesome. I wonder if any of our
Mhm.
listeners use you. If
That
you
would be
do,
cool.
comment below. Send us
That's
Yeah,
a
my
message
guy.
on Instagram. Shooting the shit with Rach and Neil. That'd be awesome.
Right? Cool.
Yeah. So, what is your favorite part of your job, or like a kind of any fun facts that you have about your job?
Yeah, I think my favorite part of any day, and unfortunately it's not every day, but a lot of days I get to talk to people that need a lot of help. They're like, Brandon, I don't know what to do. I've done screwed up. I used somebody that was like my brother's plumber that had an uncle that did accounting one time back in the 70s, right? And they're like, we're in a lot of trouble. So I have to go in and really revamp a lot of the things that have been done maybe over the last 2, 3, or 4 years, whether that's their bookkeeping, their taxes, or they owe the government a bunch of money and I got to try to settle that or fix it so that way they don't lose like their house and stuff. Like that kind of stuff is a lot of fun because you're making a real impact. It's not just I'm typing some numbers into software, here's your refund and carry on with your day. It's hey, this guy owes $200,000 and now he owes $10,000. Like that's a big difference. So that's a
Mm.
lot of fun.
Oh,
Yeah, I
that's
bet.
cool.
I
Yeah.
bet.
You like
Yeah.
that. Yeah, you like that puzzle of like figuring that out how to make that work, right? That's cool.
Yeah, like one of my clients I had in the past, she was in a mess kind of like that. It was like, hey, we had an accounting firm. They weren't really that great. Like, yeah, our stuff looked okay, but I didn't understand any of it. So I went back through the last 2 years beforehand in their accounting to really look in because they had a really large volume like accounts receivable. So they're sending out invoices to people, and these people were mailing out checks. All of our different clients were mailing checks out to them. So it was kind of hard to track. But because I spent, the 30, 40, 50 hours into digging into that, when I was able to find about 150 grand in money they thought they had been paid, that actually wasn't. So
Wow.
like that's another one
Mm.
of those awesome things. I'm like, dude, that's a great win, right? Like if
Yeah.
that's definitely worth their money or their time.
And they were working with somebody else before and they didn't come up with all that for them?
No, yeah, exactly.
Wow. Wow.
Dang.
That just goes to show you, right? I mean, it's not they're not the same across the board. And that's one of our questions too, is like, how do you know if you're dealing with somebody competent? And I guess part of it's that qualification wouldn't hurt. Would you call yourself again, that highest qualification?
It's enrolled agent, EA.
Okay. Yeah,
Hmm.
interesting. Hmm,
So when
cool.
you're
Yeah, I
hiring
mean,
an accountant to ask for that, see if they
Yeah.
have that
yeah.
How
qualification.
many are there? Are there a lot of EAs or is it
I would say they're overwhelmingly people are much more knowledgeable about who CPAs are rather than EAs. Because, like I said,
Mm.
usually you don't find an EA until you owe like a six-figure bill to the IRS, and you're like, "Oh my God, what do I do?" And it's not because CPAs don't do representation; they do. But CPAs are just they're different enough from EAs that they're two totally different specialties within the same field. Kind of like when you think of like different doctors, right? Like you have a doctor that works on hands, you have a doctor that works on cancer, right? So it's kind of like that. So, like CPAs, they will usually go down one of two routes in their career. They'll either go into financial auditing, which is where they take everyone's books and financials and then they make sure that what they're giving their shareholders are actually a fair representation, or they go into the tax side, or sometimes they dabble in both and not really specialize in either. Whereas EAs were specifically really only bred for taxes. Now, a lot of us do have great accounting background. Like I went to college for accounting as well too. So we'll do like bookkeeping, payroll, business formations, and other things that you need in an accountant other than just taxes. But EAs are really only specifically bred for taxation.
Oh,
Mm.
interesting. Okay.
Hmm.
Well, I scored with you, Brandon. I didn't even know you
Yeah.
were an EA. I don't even know what that was until now. One of my good friends, they referred me to an accountant that I was using prior to Brandyn, and then I hung out with them again, and I was like, oh yeah, thanks for referring me to that accountant. They're like, oh, we're not using them anymore. We found a way better guy. And I was like, well, give me his number. I'm switching. And that's how I met Brandyn. So word of mouth.
Yeah, that was almost 3 years ago. That's coming up on 3 years, and I still work with that client every day too.
Nice.
So yeah, I've been working with you now for shit. I think it was at the end of 2020 is about the time that we did that. And it was kind of the same situation. It wasn't like as dramatic, but like I remember we did some cleanup on your books to get things redone so that we had numbers that were accurate, because there were some things not matching up.
Yeah. And we weren't using QuickBooks. So you kind of integrated that into the business, which meant a lot of data entry and kind of, back work, like you were saying. So yeah. And there's an investment with that, it's more work for them. So you have to pay for that. But once you get it all set and it's cruising, it's just a monthly fee and you don't have to worry about it. It's fantastic.
Yeah. We're in our clients' books really every single day. At least we try to do every single day. During tax season, there may be some leeway because I'm trying my best. I work 16, 18 hours a day, and I do still do some of the bookkeeping. I don't necessarily do all of my clients' bookkeeping, but like the one that you work with, Savannah, she's one of our wonderful employees, and she does your guys', your clients' books every day. And we go in and I'll double check her work behind her every month.
Yeah, that's amazing. Yeah, she's great. She needs all the codes for all my logins, so she texted me, can you send me the code?
Oh yeah.
Classify this, classify that. Yeah. It's ridiculous.
Well, I'm sure that there's a ton of people listening, right, who are like haven't hit the point where they're have to dial 911 and find an EA. So to not get there in the first place, let's talk a little bit about people who maybe don't even have any kind of bookkeeping or accounting or any of that kind of stuff yet. Where should we be starting to get going in the right direction, to have our at least foot in the right direction, and what should we be wary of?
No, that's a great question. And I'll tell this probably once a week. I'll have a conversation with someone that's like that, where they're like, hey, I just started my business. Do I need an accountant, whatever? And I'll tell them honestly, like, no, you don't need me. I mean, I would love to work with you. However, I don't think it's worth the money every month to pay me to do something that I think they could easily do, just because, one, there's simply not the volume of transactions. When you first start off, you really got to bootstrap it and make sure that you're doing the best you can to spend in as least amount of money, because that might be your bread and butter that you take home every day to provide for your family, take your kids to go do stuff. So you got to live off of that money. So an accountant may not necessarily be something you need right off the bat. I usually tell people, if you're not going to have an accountant right off the rip, which is fine, at least do one thing: is get an account that is separate from your personal and keep them separate. That is probably the best thing that you can do, is not use business money for personal stuff, and try not to use personal funds for business stuff. I usually will recommend to people, like, if you use a Chase bank, right? If you have Chase for your personal, get another account just for Chase for business stuff, and then that way, if you need to pay yourself, or you need to put money into the business, you can just transfer money over and it's instant, whereas if you use another bank, you got to wait 2 or 3 days, and that's not super convenient. So, I mean, that's something I typically will tell people. If you're starting off, at least get get an account. And then the next thing that I tell people to do is talk to specific people. And I think there's 3 people that you should be talking to. One would be an attorney. And I think an attorney in business in general, like a small business attorney, is at least someone worth the $200 consult or whatever you're going to pay to them, to at least talk about, okay, well, this is my business. I'm a real estate photographer. What kind of liabilities could you see that could potentially put my personal assets in as an issue, right? So it could be something as simple as you're at someone's house doing a photo shoot that they're trying to sell, and you bump into something, you break something, and it costs a lot of money, right? Having insurance is one thing, but at the same time, if you're separating your assets between personal and business, that could potentially save you from, having to sell your house or your car or something really dramatic, right? Now, I mean, I'm not an attorney, so I won't give the, legal advice, but that's something that I see very common. A second person to talk to, even if you're not going to hire them off the bat, is an accountant. Talk to a couple accountants. You had asked a question earlier, and we didn't get a chance to get to it because we were talking about a couple other things. Like, what kind of stuff should you even ask an accountant?
Right.
And I think to me, really the biggest way to know if an accountant is a good fit for you, and this is the same way for me, is to know if a client's a good fit to me, is if the accountant is going to explain things to you in a way that makes sense, and they're not just trying to use impressive jargon and IRC codes and all this stuff to make it sound like super impressive, I think that's someone you should probably try to work with because you can understand what they're telling you, right? It's just like if a doctor told you to do A, B, and C, but you don't understand those, you're probably not going to get any healthier. So
Mhm.
same thing with an accountant. I think that they should be able to relate to you and talk to you like a normal person and be able to explain exactly what it is that they want you to do.
Yeah. And
And
if you are interviewing an accountant, like don't be afraid to ask if you don't know what something is. Don't be afraid to ask, what does that
yes,
mean? Like just
oh,
don't feel dumb. I mean, there's no dumb questions, especially when it's not your
right.
field of profession, just don't be afraid to ask
Okay, dumb
Yeah, no,
question
that's
then.
Okay.
absolutely that's a great point.
Here
Yeah,
comes
that's
dumb.
why like
Here comes
typically
dumb
during my
question.
oh sorry, go ahead, bud.
Oh, sorry. I was gonna say, here comes dumb question then. So, just for people who really don't know anything about this world at all, there's some of these words we've even been thrown around like CPA and bookkeeping and accountant, and they might not
Mhm.
even understand what is the difference. And some of these,
Yeah.
a bookkeeper could also be an accountant, but they could not be in that kind of stuff. So maybe we could just give some layman's explanation about some of that
Yeah,
too.
that's fantastic. So, what I usually tell people is that if someone advertises themselves as just like a bookkeeper, that's probably someone that has some very basic knowledge of accounting, but they're not like really in depth. They may not understand necessarily like the balance sheet, which is something that shows how much your assets are, or any of your liabilities or debts or anything, right? So they may not understand that. And they may classify some things as expenses that aren't really expenses. A common one would be like a credit card payment. If you pay off a credit card, that's not an expense or i.e. in a deduction. That's just a reduction in a liability that's on a different financial form. And that's something that an accountant would know, whether a CPA or EA. That's someone that advertises themselves as an accountant would know to do and know how to look out for it. Now, if they're advertising themselves maybe as like a CPA or an EA, someone like me, those are the type of people that, if you're starting to get more complex tax situations, those are the type of people that you should be looking for overall. They, of course, are going to be a little more expensive typically, maybe not always, but generally they're going to be a little more expensive, but they have a way more developed knowledge base around maybe your industry or profession, the different things that are specific for like real estate photographers, for example, that maybe they don't see for other people. Those are people that you might want to talk to if you have a little more money, you make a little more profit, and you want to like, I'm not paying the government too much. How do we fix that? So there are different levels of different professions.
Yeah. And Brandon saved me. I think the first year we switched me over to an S corp, which we'll get into, but you saved me
Yeah.
like almost 13 grand in
Yeah.
1 year just by switching my structure. So it's definitely, I think when you're first starting out, you can get away with a bookkeeper. Wouldn't you say, like when you
Yeah.
start getting busier, just get bookkeeper just basically is taking all your transactions that come in and out of your bank account, your business bank account, and they keep track of them for you.
Yeah.
Pretty much. At
That's
the
a
end of the
great
month, they're
explanation.
balancing and making sure that what is in QuickBooks or on an Excel sheet matches your bank statements. So, which is called
Mm-hmm.
reconciling your accounts. I actually worked in
Yeah.
accounting, Brandon,
Oh,
for
okay.
like
Very
a
well.
year, accounts receivable. Many hats I've worn. Anyways, so bookkeepers are just pretty basic, right? And then the
Mhm.
CPA and EAs are a lot more specialized in taxes and all of
Well, what
those
can somebody
laws.
expect to pay, and what is it based off of if they're looking for a bookkeeper? Is there like, there's probably, I'm sure, a range, but
Oh,
like,
yeah. Well, that's a good question because I mean, when you think about it, right? So, like me personally, I'm remote, so I don't have like a big office that's like on a nice busy street. Like I don't have a huge overhead like that, so I'm not passing those type of costs on to clients. So,
mm,
if you go look for like a big, large firm, like Price Water Cooper House is a good example. They're one of the top four accounting firms in the nation, and they're huge for financial auditing. Like that's the one that you usually go to for that. They're going to be far, far more expensive for some of the similar work that I would be doing. But I also don't maybe have the resources that they have or that, the expertise in a very particular field that they would. So it's going to vary depending on how big is the company that you're trying to hire, how many employees do they have, how often are they going to be talking to you. If you only talk to your accountant once every 6 months, I would hope that you're probably not paying them as much as someone that you probably talk to every week or every couple of weeks.
mm.
That's something that you can be expecting as well.
Okay, cool, cool. Yeah, well, good,
Mhm.
good to know some things to think about too. To even know that somebody might talk to you weekly
Right.
versus twice a year or something. Yeah. Okay.
What
Cool.
I see for a lot of bookkeepers, like if you're on like bookkeeping level, it could be a couple $100 a month. If you're like EACPA, or an accountant, it might be a little bit more than a couple $100 a month. And a lot of it will also depend on just how many transactions every month you have. If you only have 20, 30 transactions a month, I'm hoping you're not paying $600 a month for an accountant to do your transactions, right?
Yeah. Yeah. Okay.
That'd
Awesome.
be pretty spendy. So Brandyn, you were saying, if you want to be set up properly as an entity, as if you break something on the job, they could come after your personal assets, but there's ways to set up your business entity so that they can't come after your personal stuff, just your business, what your business is being.
Right.
Can we just discuss kind of the different types of businesses and business
Sure.
types that you can set up?
Yeah, so really in the US, there's four main for-profit entity styles. I mean, there are a couple more, but this is really the main four. You have a C corporation, you have an S corporation, you have a partnership, and you have a sole proprietorship. So one thing you'll notice is that nowhere in there did I say LLC. A lot of people will think an LLC is like an actual structure. It's not. It's a state charter or state organization for your company, and that provides the limited liability protection for a limited liability company. That's what the LLC stands for. So an LLC could be any one of those four, actually. So like, for example, I'm BMC Tax LLC. I'm actually classified as an S corporation. So if you file articles of organization in, let's say, Washington or Idaho or wherever, and if you're the only owner, by default, you're considered a sole proprietor. So you would file a Schedule C with your own personal taxes, and you'd pay like your Social Security, Medicare through self-employment tax and income tax on that income there. Your company still does not pay taxes, you as the owner. And then the next one would be like a partnership. So if you're an LLC and you have two owners, by default, you are a partnership. So, and the same thing is they will file their own informational tax return. Notice I said informational because, again, partnerships are not going to pay taxes on the income that the partnership makes. The owners will, based off of whatever percentage of income that they get for the year. Now, to become an S corporation, you can't start off that way. You can't file articles of organization or incorporation in a state and just say, yes, I'm an S corporation. You have to actually make an election with the IRS to say, hey, IRS, I'm BMC Tax LLC. Starting on this year, I want to be taxed as an S corporation. There are a lot of advantages and there are some disadvantages to being an S corporation, which is why, especially if you're considering doing it, you would want to talk to your tax professional and determine if it's a good move for you. And then the last one is a C corporation. You can be Inc., corporation, corp, LLC, whatever. The nomenclature at the end is irrelevant. But if you're taxed as a C corporation, that's the company that actually pays taxes. The shareholders don't. So like think Ford, for example, right? Like if you own a share of Ford, as a shareholder, you're not paying your 100,000th of a percent of ownership you own in Ford because you own one share. The Ford pays taxes, and then you just get dividends and whatnot from that investment. So that's a big difference. Now, typically, most people are not going to be a C Corp, especially if they're starting out, because the tax rate's 21%. It's whatever, let's say $100,000 in net profit, 21,000 is net tax, easy day, right? Well, it's different than if you're going to be a sole proprietor, right? You might be in the marginal tax bracket of 24%. But if you do what's called your effective tax rate, which would be kind of like comparing apples to apples, you might be at like 8%. Yeah, you're in the marginal 24, but you're only 8% effective tax rate. That's a huge difference from 21%. So I don't typically recommend people to go C Corp.
So much information.
Whew,
can you explain?
That's a lot right there.
Can you explain the LLC? Because I know a lot of us are LLCs. Like a lot of us are sole proprietor LLCs or S corps. Can you explain, kind of dive into the LLC and the S corp, kind of the difference between the two and what's covered, like how it protects your assets?
Yeah, so as far as protection of assets, I would say recommend the attorney for that because that would really be giving legal advice. But at least on the tax side of the house, let's compare a sole proprietor limited liability company to a S corporation limited liability company. So to start, they're both an LLC. They're just taxed differently. So the biggest difference is the self-employment tax. So when you are a sole proprietor, whether you're LLC or not, let's say, for example, you make $50,000 a year in net profit from your business, like its bottom line is 50,000. Well, aside from income tax, you're also going to have self-employment tax, which on $50,000 would be $7,065. So on top of income tax, you have to pay $7,064, which a lot of people are like, well, what is self-employment tax? It's just Social Security and Medicare, but it's at the full rate. So a lot of people don't recognize this, but when they look at like their paycheck, yeah, they see Social Security and Medicare come out, but they don't recognize is that the employer actually pays the exact same amount for Social Security and Medicare on out of their own money as well too. So self-employment tax is the full amount for Social Security and Medicare. It's expensive. It's 15.3%. That's a lot, right? Plus your income tax. So if you have an effective tax rate of 8%, so if you have 0.08 plus 0.153, that's 20, that's almost a quarter of the money you make already just off the top going to the government. That's expensive. So a big difference between that and an S corporation is the S corporation, again, like I said before, won't pay taxes on the money the shareholders do. So let's say that as BMC Tax LLC, I have 50,000 a year in net profit. I would not pay that $7,000 in self-employment tax. I would only pay my income tax. So that's a huge savings. Now, the one part where the IRS has almost kind of got like a got ya thing is there's a requirement with S corps, and here's why. You have to run a W-2, a payroll for yourself as a shareholder from the company. So as a sole proprietor, you can't W-2 yourself from your own company, but as an S corporation, you can, and it's actually required to take reasonable compensation. Now, reasonable compensation is going to be different to every person you talk to. There's no bright line test that says net profit, hours worked equals, whatever amount. It doesn't work like that. So maybe on $50,000 in net profit, I would say 20,000 is probably a fair wage. So that means there's 30,000 that you're not paying that Social Security and Medicare tax, self-employment. That's still a savings of $4,200 a year. So that makes a big difference on just saying, hey, IRS, I'm going to file this 1-page document with you guys or 2-page document with you guys, and now you're saving $4,200.
Yeah, it adds up too.
Yes, especially year after year after year, especially if you continue to grow. It might be 4,200 for the first year, and then 8,000 the second year. It really does add up a lot.
Yeah, exactly.
Okay,
exactly.
Cool.
Big savings.
Well, what about write-offs? I feel like I don't know if you've ever seen that on social media that got thrown around for a while from Schitt's Creek when it's like, it's a write-off, it's a write-off. And it's like, it's not just free money. Like you can't just, everything's a write-off. You can't just go to the store and go buy ice cream and whatever. It's a write-off. Can you explain a little bit about what we really can be writing off and what we should be cautious about and that kind of stuff?
That's a great question. I love that scene too. When I seen that earlier, I was like, that is hilarious because I know exactly what scene you're talking about. I haven't even watched that show, but I've seen that scene on TikTok. So it's like, that's so relevant, but I explain people because deductions can be different from one industry to the next. What I explain to people is the easiest way to think about it is if it looks like a duck, quacks like a duck, walks like a duck, it's probably a duck. If you've got a cow and you're trying to call it a duck, it's not going to work, right? So like, for example, let's say you're going to be a real estate photographer. If you go buy an airplane, you're probably not going to need that. You could probably find easier methods to do it, but there's probably not a reason you need a plane as a real estate photographer. So you're probably not gonna be able to write stuff off like that. Or going to Disney, for example, right? So unless you're selling Disney, which I don't think you're going to, you probably don't need a trip to Disney and be able to deduct that. It's just not going to be something that would hold up in the event of an examination or audit.
Right. But I took a picture of Epcot.
Yeah, exactly. I was, ideas for ways to sell a property. I don't know. I don't think that would hold up well.
Yeah.
So it comes down to common sense, a lot of it.
Sorry to interrupt. Can we explain what a write-off is, just for those who are familiar?
No, that's a good point. So a lot of times you will hear people write off. That's not actually the technical term. It's sort of like a slang way of saying a deduction. So a deduction or write-off is just a way that let's say Rachel pays me $10,000 for a service, and I went and bought a printer for $200 to be able to do the work that's going to cost get me $10,000. Well, that's $200 from $10,000. So now instead of paying taxes on $10,000, I would pay taxes on $9,800. So it reduces how much that you're actually going to pay taxes on, because you pay taxes on what your bottom line, your net income is, which is gross revenue minus allowable deductions or write-offs, and then net profit.
Perfect. I always think about it in terms of like everything that I buy on the business comes in a discount. I'm saving like 15 to 30%, depending on how much money I make.
Yeah. And a really common mistake I see, especially with new business owners, because they're like, I just don't want to pay the government anything. I tell people I would rather have 75 cents, give Uncle Sam a quarter, than to me have a dime and he's got nothing. I'm out. I'm way worse off. I didn't give any money to the government, sure, but I only have a dime. But other Brandon could have had 75 cents and still gave out a quarter, right? So it's not always about just because you can spend, you should spend. I think that mentality will certainly ruin a company very quickly, or at least you just won't ever have any money if you do that.
Oh yeah,
You got to spend smartly.
Just trying to spend to try and get your tax liability down. You're just like, well, let's just spend a fortune of money and they can't get anything from us. But yeah, you have no money left. Right. Gotcha.
another major fallacy that just came to mind that is super common, especially with brand new business owners, is what I call bank balance accounting. So they're like, at the start of the year on January 1st, I had $100. I ended the year with $1,000 in checking account. So it must mean I had $900 in profit. No, because not everything that you spent money on necessarily is considered like a deduction, right? So let's say throughout that year, you transferred over money from business to personal, like $10,000. Well, even if you were to try, let's say you were trying to write that $10,000 off, you have to write that $10,000 as income somewhere else. 10,000 minus 10,000 is still zero. So it didn't do anything, right? So when you take that 10,000 in owner's draws, what it's called, or distributions, that's not writing off income. You're still going to pay taxes on that 10,000.
Mm-hmm. Rach, I'm sorry, I got to interject. Okay, I got to give everybody a little tip, little trick that's been working really well with me with the marketing kit from HDPhotoHub. I use it as a little treat with any new client to kind of just put it right over the top. Like this is a little like customer service finesse. I get a new client, they do the shoot and everything with us, and then when I go to send the completed order to them, I have it set up as a template email already, and it says, hey, thanks so much for using our services. As a little bonus, I also am including the marketing kit, just so you know in the future, it's normally $50 to add this, but I just want to say thank you so much. And I want to let you know that this includes a dedicated website to your property, printable flyers, social media templates, a video slideshow, and it's going to have your face all over it, and it's going to be great for you, and you can use it on your next booking appointment to win more listings, so that we hopefully are working with you again soon. And so I throw that right in there, and it's just like the piece de resistance, and they're like, what? Who are these people? They're fantastic, and we just got this cool thing. And guess what? They're hooked on it next time. Next time they buy the marketing kit, and I get a free little bump, a little extra money with no extra work. So I love
that's freaking genius. I think I might start doing that because I don't do that currently. That's a great incentive. I've had a lot of clients call and they're like, oh, do you do like a new client discount? And I used to, but now I don't. Yeah, I think that would be a really good thing to do instead of saying, oh yeah, we give you a discount. No, you get a free property website and marketing kit with your first order.
Give you a bump. Yeah, you make more money. Yeah, and it just costs a little bit to add that on there. So it's just like, yeah, nice finesse.
So if you want to try out the property website and marketing kit for yourself, you can put in promo code STS, as in shooting the shit, over on HDPhotoHub, and they will give you 50 free credits, which equates to about 3 property websites and marketing kits that you can test out and send to your clients and see their reaction for yourself. Okay, let's go back to the podcast.
So we were trying to figure out some help with our taxes this past year and stuff like that, and we're still figuring it out and trying to figure out what we're going to do better this year for bookkeeping. And just making sure, because we're like, how can we possibly owe this much money and not have this much money? You know what I mean? And like, but one of the things, somebody looked at some of our stuff that someone else had prepared, and they kind of reviewed, and they were like, well, there's a couple things they wrote up on line whatever, and to me it's like they're speaking Japanese, but like a line whatever, that's probably a red flag for an audit right there. I don't think they should write it up like that. What are some things that we should be cautious of when we're doing deductions or doing our taxes that could be things that an auditor is looking for to go, whoa, we're going to look into these books a little further, and you might get yourself in some heat?
Yeah. Don't guess your numbers. What I mean by that is, don't say I have 10,000 in revenue, exactly 10,000 in legal expenses, exactly 500 in office, exactly 250 in supplies, right? If you have an even number for every entry, the likelihood of that is so astronomical that IRS is probably going to pull you for examination. And the other thing a lot of people think is, I'm small potatoes. I only made 10,000 in revenue last year. Yeah, I lost 10,000 in net loss. The IRS ain't looking for me. They're looking for the big guys. No, they're not. They have an entire department dedicated to people just like you, right? So, that's a huge issue. People are just guessing their stuff. They're not keeping track of the income and expenses correctly. And what happens, the IRS will match what you put on the return to source documents. Now, especially if this is your first year working self-employed, if you do like PayPal or soon to be, Venmo or Cash App or whatever, right? They're going to issue a form called a 1099-K. And that's going to say what is the gross amount, meaning total amount that you was paid to you for whatever services. If you don't provide that form or at least have that much or more in revenue reported on your tax return, the IRS is going to go, yeah, well, that don't match what we have. Let's look into this, right? So you can't just guess your numbers. I think that's probably the biggest thing I see is with new owners is they just try to say it was about this much or last year I had the same amount of miles. Just put the same miles this year. Like, nah, it's not gonna work, man.
Yeah, they're not dummies, right?
Yeah. Yeah. I mean, literally their whole job is to see where are they losing money at in tax revenue. That's what they do.
Yeah. So how long should we keep our records for our taxes? Like how far back can they audit? Can they audit from 5 years ago? Like what's the
Yeah, so I mean, unless there's criminal or negligence, which there isn't really, there's no statute of limitations on those. If it's like a normal examination, like maybe numbers just don't match up or something, 3 years is as far back as the IRS will go. Now, states are totally different. You can have people like wonderful California, their statute of limitations is 20 years. So they can audit back 20 years. Yeah.
California.
Yeah.
Oh, thank goodness we don't live there.
No, yeah. So every state has different statute limitations too. But IRS, I mean, general rule of thumb is 3. So, like, let's say on April 15th of 2021 is when you file your 2020 taxes, right? Well, the IRS has 3 years from that date, so that'd be 24. So April 15th of 2024 to look back and say, hey, we think you actually owe more taxes than what you reported. If it's after that, they're going to lose out their chance. And typically what happens is if people did mess up on their tax returns, they're going to notice a pattern. Every 2 years behind is how far the IRS is behind. So right now we're finishing the 22 tax season. People are getting notices for the year 2020 because that was 2 years tax ago. They're barely just under the limit of the 3 years the IRS is auditing 2020 right now. So you might think you got away with something, especially if you try something. You're like, oh, it's been 2 years. IRS forgot. No, they just haven't gotten to your tax year.
Jeez. It's like the scariest thought to me. Will you handle an audit?
Yeah, I do representations for audits, examinations, anything that the IRS has to do aside from tax court. I'm not an attorney, so I'm not going to go to tax court. You don't have to be an attorney technically to go to tax court. You have to be something that's got a totally different title, but I don't intend on doing that. I don't want to go to court. I've never had any of my clients go to court. Very rarely will I have an unsatisfied outcome from an audit. And it's typically if someone comes to me with something that they're in an audit, I will tell them like, look, we're going to try. I will try my best to fight for this, but if I were them, I'd audit your butt too, right? For this exact reason. So, ahead of time, I would prep the client, say, you're probably not going to have a favorable outcome. And there's times where I'm like, $200,000 bill, like they're joking. Let's fix this,
Wow. Yeah. Yeah.
And then for the audit, so we all know we don't want the audit because we don't have to go through. I'm sure it's a pain in the ass, but also what happens is there's potential for like larger fines than what you would have owed if you just did things right? How does that go exactly?
Yeah, so like I said, the biggest thing is the IRS will do that document matching thing. So they'll look for that. And if they don't have the documents or things that are matching up with what they show in their system, then they'll pull you for audit examination. And it may be so bad that they ask for bank records, ledgers, statements, any sort of financials that you've ever prepared for those years and say, all right, give them to us. And then they're going to sift through every transaction, total up things on their own, and try to see if their profit and loss or whatever is the same. Or what'll happen as well too is they will say, okay, prove to us that this transaction was actually for business. That's the hardest one for a lot of people because they don't know how to articulate it without representation, right? So you might say, yeah, I spent $300 on a camera and you're a real estate photographer. The IRS is going to go prove to us how this was a business expense and you didn't just use it once for business and then you took it to Disney, right? So you're going to have to find a way to articulate that. And if you can't, you will lose that deduction. And that happens frequently for people.
And is there fines on top of that? If they find like, oh, this is off by 10 grand, is it like, okay, now you owe us 10 grand and some additional fines, or how's that work?
Yeah, so at the very least, if you're going to owe more taxes than what you originally reported, regardless of the amount, you're already going to at least have interest associated with it because, especially if the IRS is auditing 2 years behind schedule, you technically owe that taxes from 2 years ago. So there's interest immediately from 2 years from the due date of the return. So you at least have the interest. Next is you could have penalties for failure to pay right off the rip because you didn't pay the right taxes 2 years ago. You're paying them now, so failure to pay, right? So that could be another one. The worst one, or one of the worst, I wouldn't say the worst, so one of the worst ones you can get is substantial understatement tax payment penalty. So if you underreport your income at a specific percentage or dollar amount, automatically you can get hit with like a $5,000 fine. Like it gets expensive quickly, right? So like if, a lot of times people are like, oh, I'm not going to report the cash payments I make. That might get you around for a while, but if you start growing, right, and all of a sudden the IRS starts looking, they go, you've got a $500,000 house, you only report 30,000 in revenue. How in the world are you affording that, right? So then they start looking back and they realize, oh, this guy has been, abusing his tax returns, has been, committing fraud. Basically, you can get hit with some very substantial penalties.
One thing that just came to mind that I don't think Rachel and I brainstormed earlier, but we should talk a little bit about estimated tax payments.
Yeah. That's a great question. And I typically hear the question of, should I do estimated filings? That's actually where it starts off when I talk to people. Should I do estimated filings or quarterly filings? There's no such thing as a quarterly filing. What it is it's estimated tax payments that should be due each quarter. And you base that off of what your total tax position is, right? So if let's say, taxpayer and spouse is a real estate professional or a real estate photographer, and taxpayer has a W-2 job, they've got 2 kids. Basically, between them both, they need to figure out how much total income that they expect to make through any given period of time, minus their deductions, tax credits, and all that to say, okay, are we still ahead? Or do I need to make a payment to the IRS to basically prepay these taxes? Now, there are ways around that. You could go the entire calendar year without paying any taxes and still avoid penalties. There's only 2 ways out of that. The first one is by January 15th of the following year, if you pay the exact same amount in tax between credits and withholdings and estimated payments as you owed for the tax year prior, you could avoid any underestimated tax payment penalty regardless of how large it is. The second one is if you pay at least 90% of what you do owe for the year by January 15th, you can also avoid the underestimated tax payment penalty regardless of how much you're understated. Now, the underestimated tax payment penalty isn't that bad. It's like 0.5%. So it's not typically bad, but depending on how much income you're talking, if you have a $300,000 tax bill, that adds up quickly, right? But if you're only off by like $2,000, if you spent that money more wisely and got a better return on investment, that's not a really wrong answer in my eyes. I mean, it's not right with the law technically, but if you made $500 off the money you could have gave to the government, but they would have only charged you $40 in penalty, you're still ahead.
Yeah. And let's explain this a little too. So let's say this is their first year in business. They always had a job employed by somebody else there. They don't even understand what I have to do what? Because that's where I was. I remember I talked to my buddy. He's like, yeah, you doing your estimated payments? And I was like, my what?
Yeah, exactly. Oh God. Yeah. I tell people a good rule of thumb, especially if you're not working with an accountant to start with, 30% of whatever your bottom line is. So like your revenue that you bring in, people pay you minus very obvious deductions, whatever that amount is, take 30% of that at least, take 30%, put it in a savings account that you will not touch until it's tax time. At the very worst thing you could do is get an underestimated tax payment penalty, and it's usually not that much. And at least you have that money saved, because what happens is if you don't even think about it, you're like, oh, I don't need to make any estimated payments. I'll pay it at the end of the year, but you don't save any money. Well, if you owe $15,000, you didn't save 15,000, you don't have 15,000 now. That's a big hit to take at one time, right? So I tell people 30% of their net profit, if they're going to stay as a sole proprietor, is a good rule of thumb.
Yeah, that's what I do. It's great too. At the end of the year, I always have like a little bonus because I don't use it all.
Yeah.
I'm like, yay, I have money in savings.
Right. And then usually like what you and I will do is a couple times throughout the year, I'll sort of pro forma. I'll ask for, husband's most recent pay stub. I'll look at some of the other things you guys have as your whole tax position. Okay. And I'll say, Rachel, I think by at least this date, you should at least either have this amount saved or have at least paid this amount to the government.
Mm-hmm.
So that way you don't get hit with penalties, or you don't spend that money unnecessarily hoping that you'll have it at the end of the year.
Yeah, exactly.
Let me ask you this. So let me make sure that I think I'm understanding. I hope I want to make sure everybody else listening understands. So let's say you did your whole year, your first year in business, and you had no idea about estimated tax payments. If the tax due date went by and you never paid anything right off the bat, there's going to be penalties for never having paid, even if after that date you gave them everything. It's too late. But
Yeah.
if you had saved that money at least, or you had it, happened to have it, and it's still before the due date, and you at least gave them, what do you say, 90%?
Yeah, 90% for the current year, or 100% of what last year was.
Yep. Then you would avoid those additional fees that you're going to get on top of it. So you don't necessarily have to do quarterly payments, but a lot of people do it just to make sure that they don't
Yeah, it's
lose
a
their money
good
along the
business
way.
habit. I pay every month. I mean, that's just me personally. I'm also in the tax business, so
Yeah.
like I want to stay on good terms with the government. You
Yeah.
know, whether I agree with certain things is totally irrelevant. I make estimated payments every month, but that's me. You know, and I don't really recommend every one of my clients to make monthly payments, because I know kind of what my income is going to look like most months. But especially when you're
Right.
starting off, it might be really high one month and then really bad the next month. So what would really not be great is like on your high month, you're like 20,000 in profit. You're like, dude, I'm rich. This is great. And you
Yeah.
give the government $6,000, and next month you're down $4,000. You're like, oh my God, I need money. You can't go ask the government for that money back until next year when you
Right.
file your taxes, if you're owed a refund. So, you know, it's helpful to at least kind of ride the wave in the beginning and see where you're landing at to make those payments, and don't do them so, you know, every month, because you may be doing it too much.
Yeah. And then there's these, there are these quarterly dates that you hear about, like the first quarterly date is due this certain date.
Yeah.
So am I correct in understanding that do you have to at least make quarterly, or you don't have to, so long as you get 90? How does that break down?
Yeah. So generally speaking, what you need to do is basically 15 days after the close of a quarter, that's the due date for the last, you know, the previous quarter's taxes, how much you should make in estimated tax payments. You know, because there are other ways to, it's a little more in depth, but even if you still end up later on owing an underestimated tax payment penalty, you can actually reduce it if you were making quarterly payments throughout the year, because you could show, well, I was up on this quarter, down on this quarter, up and up, or whatever, right? So you could still show that you were making payments and lower that penalty. You might still have one, but it won't be as bad as it was.
Okay.
You know, I highly recommend, the best time for people to talk to an accountant, if they don't all year long, is right after Halloween, right before Thanksgiving. Those like 3 weeks, because tax season is done with. We can't e-file returns anymore. So generally, I tell all my clients, hey, I got your return prepared. Talk to me in February. We'll e-file your return then, basically. You know, so during that season, it's very low for most accounts. No, but most of accounts, kind of a quiet time. That's the time to start saying, hey, accountant, I didn't do stuff all year. Can you help me figure out, do I need to make an estimated tax payment? I saved 30% of what I thought was my net profit from year to date. You know, how far off am I? And I think that you'll find you're going to have a really great relationship with an accountant if you do something like that.
Definitely.
Cool.
Yeah, don't call your accountant on April 1st and say, I need to file my taxes. They'll hate you.
It kind of stinks, and I feel bad, but every year there's always one person that calls me on tax day, and I can't answer. I'm literally from like 6 in the morning to 11 o'clock at night. I'm literally back to back to back taxes. Like sometimes I feel bad. Like I had to like hurry up and eat between meals or between clients if they finish quickly enough. And they're like, hey, I tried to call you yesterday. I'm like, do you have any idea what yesterday was? Like I don't even remember anything anymore now after yesterday. Like that's not the time to call me.
Totally. Yeah.
Yeah.
Well, on that note, to either be gearing up to, talk to an accountant or whatever, the bookkeeper, and then also keeping a good relationship to make sure things go smoothly and everybody's best buddies, what do you recommend? Are there any, like, there's a lot of tools for tracking, doing taxes, and tools for like tracking your gas mileage.
Yeah.
Any things that you recommend for like apps or resources or ways to keep on track and keep it clean?
Yeah. Especially in, like if you're going to be a real estate photographer, probably your best one is Mile IQ. Mile IQ, it costs a couple, but I think it's like $5 a month or so. I kind of joke, I call it like the Tinder of mileage apps because you swipe right if it's personal, you swipe left if
Yeah,
it's business,
I
right?
actually have it. I have that app. I
Yeah.
just got
So
it. That's funny.
it's really easy to use, and it's a lot like a lot of other apps, and it keeps track of all your stuff in the background. Yeah, if it costs $6 a month, you're not spending all that. You're spending what's that, $72 a year on a mileage app that could get you a deduction that's a lot more than that in tax savings. So highly recommend getting something like MileIQ. That's for a lot of people, that's their biggest deduction is mileage.
Mm.
You know, the mileage differs every single year, so it's not the same from one year to the next. You know, so that's something to definitely have. And I will tell you that is the first thing the IRS does during an examination. If you have a mileage deduction on your Schedule C for
Mm.
a business, that is the first thing they'll say is, "Hey, let's see your mileage log," because they know nobody keeps one. So they know that the chance of them just simply asking, they're probably going to win that. You know,
Mm.
so if you're ahead of if you know, work smart, not hard, you can have a mileage log all year long. You just give it to the government if they decide to audit you, and you're like, oh, here you go. By the way, oh, perfect. My deduction is sustained. I don't lose it.
Are these
Mm.
apps good enough for the government? I mean, will they hold up?
Yeah, they
Yeah.
absolutely will. You know,
Okay.
and what's nice about, I mean, honestly, I think Mile IQ and the stuff like that is kind of like overkill because it even tracks like all the different turns and stuff on a map if you wanted to
Mm.
print that out. But typically, all you really need for a mileage log to be sustained would be like a date, a start time, and an end time, and then your business purpose and where you went, right? So, like, you have to say what you were doing. You can't just say, oh, I drove 4 miles yesterday. That was business. Well, what did you do that made it a business trip, right? So, like
Mm.
going to Target could be a business expense if you're buying like printer supplies or something, right? If you go to Target to go buy, you know, White Claws, like that's not going to help you. You know, so you got to have something to show like this was in fact a business reason to drive, and
Right.
then you can get the deduction for that. Another one that it's not my favorite accounting software. I'm not really huge on it, but it's great when you're first starting. It's called Wave Apps.
Yeah.
It's free. And one of the things you got to understand, if it's free, it's going to work just like it's free, right? It's only as good as what you're probably going to pay for it. So it's not super intricate, but at the very least, if you're like, dude, I don't know Excel, I don't want to learn Excel, at least you can connect your checking account. And if you do what I told you earlier about keeping business only in that one checking account, you can at least say, yeah, this was a meal, or this was an office supply, or a software, or an app, or whatever. At the very worst, if you're using Wave apps, you're at least going to be okay. You know, it's
Mm.
not QuickBooks, it's not any really expensive accounting software, but it works for when you're first starting.
Cool.
That's great.
Well, you know what I wanted to ask you? Here's a question. What about leases and versus like buying a car and then like
Yeah.
tracking your receipts for gas versus tracking your
Mhm.
mileage?
Yeah, so I'll go with that last part of the question first. I think that will help a lot of people determine, you know, whether they lease or buy. But mileage or actual expenses, that's what it comes down to. So vehicle expenses for business owners come down to one of two ways. You can either take the standard mileage rate or you can take the actual expenses method. Now, the standard mileage rate is easy. We already talked about it. Have your Mile IQ app, whatever your business miles was, take that, multiply that by the rate for the year. Here's your deduction. Easy day, right? Now, the actual expenses is a little different. You still need that mileage log because, say, for example, you drove 10,000 miles the whole year in this vehicle. Only 2,000 of those miles were for business. Well, 2,000 divided by 10,000, that's 20%. So 20% of all actual expenses, regardless of when they occurred, would become deductible. So 20% of all your gas or your repairs or your insurance or your interest, right? So a lot of people will use their own personal vehicle to do the same, you know, the same traveling that they're going to do for business. So most people, it's better to just do the standard mileage rate. It's less cumbersome, less stuff to track, less receipts to keep in your books. But the actual expenses method can be really advantageous. You know, you could buy something like an SUV or truck. So currently, right now, if your vehicle weighs 6,000 pounds or more, it has four wheels. It's meant for everyday use on public, you know, everyday roads. You could bonus depreciate that vehicle. Now, bonus depreciation, what that means is, let's say you buy, I don't know, a $70,000 F-150, right? That clearly weighs over 6,000 pounds, and it has four wheels. It qualifies for what's called a passenger vehicle, but it's not subject to the luxury automobile limitations because it weighs more than 6,000. So you're not subject to how much you're even able to write off. You can write off the full amount. Now, in 2023, for example, bonus depreciation is only 80%. So if you bought a $70,000 vehicle, you could write off $56,000 right off the bat, even if you didn't pay cash, $56,000 for a vehicle. Now, in order to write that whole 80% bonus depreciation off, you need to substantiate it with that mileage log that says all of my vehicle was used for business, none of it was for personal, and you've got to be able to prove that. A lot that will also trigger audits. If someone buys a real nice fancy car or a really expensive car and they bonus depreciate it and cause a huge net loss, the IRS may say, let's take a gamble. Let's check their mileage log. Let's audit them and ask them for it. And then when you don't have it, there goes your $56,000 tax deduction that you were hoping on to use that money for whatever.
Yep. Yep. Cool. Cool. And then, and that doesn't apply to buying a leased truck that was over that
so
way.
like leasing, right? So technically there's two different ways with leasings. I'm just going to go with the most obvious one. I'm not going to go into the second one, but the most common one is what's called an operating lease. Let's say you go to some dealership, you lease a car for 3 years. That's your typical lease is 3 years. So that's an operating lease. So the actual expenses method would work exactly the same, but instead of depreciation, writing off $56,000 on this $70,000 truck you bought in year one, you would just take 100% of the lease payments if it was 100% business use. So if your monthly payment was $300 a month, 12 months, that's $3,600. You can see how leasing is not necessarily as tax advantageous as buying, but there's pros and cons on either side.
Cool. I love that we dove into some of these things. I'm sure a lot of people, I can't be the only one who's gone, because I heard about that weight limit from Rachel, I think, after I got and I have a lease. After I got my lease, I'm like, I forgot about that. I remember you saying that before.
And last year was 100% write off.
Yeah, last year was the last year for it. That $70,000 truck, let's say you did that in 22 and it was 100% business use, you could write off $70,000 or deduct $70,000. If you did that exact same vehicle on January 1st, 2023 until the end of the year, you'd only get $56,000 because it's only 80%. And then in 2024, it goes down to 60% and then 40%. And then in 26, it's gone for good. That's also notwithstanding any changes in legislation. We got a new presidential election coming up next year. Who knows, right?
Yeah, I would imagine.
I don't speculate about the future.
I mean, if they're really trying to push the electric car thing, I would imagine they'd start promoting some kind of write-off if you go electric, wouldn't you think?
Yeah, there's they redid under the Inflation Reduction Act of 2022, they redid the electric vehicle credit. It's a little different. It's different than what it used to be. One of the components is the last part has got to be like, finished production or manufacturing in the US or something. So, I mean, there's some more to it. I don't handle a lot of those per year because a lot of people just aren't buying electric vehicles. They're not as common. They're sort of regionally accepted, right? So like California, a lot of people have them. Where I live in Ohio, there's like 3 charging stations in the entire state.
They're
like, where
everywhere.
Am I gonna go?
They're all over here. We had our buddy over from Spokane, which is like Eastern Washington. He came over to the west side of Washington and he was like, we were driving around town and he's like, there's so many Teslas. He goes, there's another Tesla. There's another Tesla. I'm like, oh, it's ridiculous. Everyone has the same flipping car here.
Yeah. Within like 60 miles of where I live, that Tesla dealership is the only place to go unless you put one in your home. So like, regionally, it's not super obvious, to get an electric vehicle.
Interesting.
Yeah. Well, I don't know. Did you have any other questions that came up for you, Rach?
I don't think so. I mean, I'm sure we could ask a lot more questions, but I feel like that was a really good overview of kind of the basics of being a real estate photographer and, what you really need to know. So
I think that's
Brandyn.
really cool. So start Absolutely. Getting geared up and reach out to an accountant and chat with them. And so you don't get yourself into a position like I was in where I went, estimated what now?
Yeah, exactly. Oh God.
My first year, I did the same thing. I was like, I owe how much? I didn't save. Like, oh shit.
Yeah.
Okay.
I have savings, but didn't want to spend it on that.
Yeah.
Exactly.
Yeah.
Totally.
So
cool.
Thanks
so much for being on the podcast with us. Really appreciate it.
Yeah, glad you guys invited me. I love doing things like that.
So Brandyn, if people want to learn more about you or maybe potentially, are you taking on new clients at this time?
Yeah, I am. Absolutely. The easiest way to get in touch with me is go to my website, which is bmctaxllc.com. Right on the front page, there's a contact us spot. So you can type in a form. It goes straight to my email. And emails, I'm always checking those daily. It's on my phone. It's on everything I have. So I'm always checking those. I usually get back to people within about a day or a business day, I should say. Weekends, I really try to stay away from my phone anymore. But yeah, that's the best way to get in touch with me. After that, you know, we communicate via email or cell phone or Zoom calls.
Awesome.
Awesome.
Cool.
Cool,
All
cool.
right, guys. Well, you heard
All
it. If
right.
you need someone, check out Brandyn. He's a wealth of knowledge.
Yes.
I love it when I ask a question. He's just like, da, 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 and it's,
Yeah,
I can
I
understand.
know.
He's so articulate. I'm like, thank you.
I know. Sometimes I have to like think about it because I'm like, man, I really could talk about this for a while. And every once in a while, I'm noticing like, all right, Brandon, you need to like back off a little bit because like they haven't talked for a second.
That's hilarious.
It's fine
All
with
right.
me. Keep
Thanks so
going,
much.
buddy.
Well, we really appreciate it. It was all a ton of, we probably listened to it 3 times over. There's a ton of good information in here. So thanks so much. And we'll catch y'all on the next one, guys.
Bye, guys.
Awesome. Take
Bye.
care.